deeply on Bloomberg Quint.
Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service, and I am Shraddha Babla. Let's start with the headlines. The trade war has officially begun, with China retaliating with trade barriers on U.S. imports worth $3 billion after Donald Trump imposed sanctions on Chinese imports worth more than $50 billion. The trade war triggers a sell-off in global equities, with the Dow eventually closing nearly 3% lower. The Nikkei is trading with cuts of close to 4%. SBI Chairman Rajnish Kumar says the bank's gross NPA will not rise above its third quarter numbers despite the recent changes in the IBC norms. That's a Bloomberg Quint exclusive. And states will elect their representatives to the Rajya Sabha today, giving the ruling BJP an opportunity to increase its tally in the upper house of the parliament. In retaliation to President Trump's imposition of tariffs, China has announced plans for reciprocal tariffs on $3 billion worth of imports from the U.S. Products range from steel to pork. Bloomberg's Tom McKinsey has more on this.
Well, it seems like it's a shot across the bow from China rather than a punch to the gut, because $3 billion versus the 50 or 60 billion that Trump is looking at is obviously a big difference between those two numbers. And they're looking at, what, 25% tariffs on steel and on pork, 25% on pork, I should say, 15% on steel, 15% on wine and fruit. So, yeah, it's a warning shot at the stage from China. Look, China said, and it's put out statements this morning, whether that's from the ambassador in the US or the Commerce Ministry more recently, saying that they're not afraid of a trade war and that they'll fight it to the end, essentially, is what the ambassador said. But also, clearly, China's policymakers and China's corporate leaders really do want to avoid a trade war. So I would say suggest that China is going to take a pretty measured, strategic approach in terms of its response, in terms of reciprocal measures to what's coming out of Washington. No, there are other measures, clearly, that they can take. They've got plenty of other firepower, whether that's taking overt measures, just putting stumbling blocks in place for US companies operating on the ground here in China, or making it more difficult to import, for example, US soybeans. Of course, China pulls in about a third of all the soybeans exported from the US, worth about $15 billion US. And they have plenty of other tools at their disposal. But for the moment, this is going to be probably a measured response from a Chinese government that wants to focus more domestically on some of the pressing issues here at home.
Let's also hear in comments from President Donald Trump, who says the imposed tariff plan is just a fraction of what lies ahead. Listen in.
With China, we're going to be doing Section 301 trade action. It could be about $60 billion, but that's really just a fraction of what we're talking about.
Well, Thursday's Wall Street session witnessed the worst day since February 8, with the three averages ending with deep cuts. Abigail Doolittle sums up all the Wall Street action in this report.
It was a big down day for stocks in Thursday's Wall Street session. The Dow, S&P 500, and the Nasdaq all fell by about 2.5% or more. That translates to a 724-point drop for the Dow. This was the worst day for the three major averages since February 8th, and it puts each of them, the Dow, S&P 500, and the Nasdaq, on pace for a second weekly decline in a row. So the bears and the sellers really taking control of the near-term volatility. Behind this, lots of uncertainty about the potential for a trade war, plus continued fallout from Facebook and the Fed. Yesterday, the Fed's policy work seems to have pushed yields down for a second day in a row. That, in turn, weighed on the financial sector. Worst sector for the S&P 500, down 3.7%. So a big drag on stocks today was that financial sector. But we also had the industrials and the material sectors down sharply. That in sympathy or fear of a possible trade war after President Trump did, in fact, impose $50 billion worth of tariffs on China. Another down sector, technology, as Facebook fears continue. Now, those shares down 2.7% on the day, down about 11% on the week. Right now, Facebook ahead of Friday, on pace for its worst week since 2011 on the data crisis. And other big tech names selling off on this, too, including Apple, Amazon, Microsoft, and many others, on fears that regulation could be ahead for big tech. And when you put these kind of stock sell-offs and drops, declines together with the fact that haven bonds and the yen were rallying, Thursday's Wall Street session certainly had a risk-off tone. In New York, Abigail Doolittle, Bloomberg News.
Well, the picture isn't looking much different in Asia either. Today morning, Asian stocks followed their U.S. counterparts lower on heightened concerns that a trade war could actually hurt global growth. So Japan's Nikkei has slumped about 3.5%. Hang Seng Index had dropped 3.7% in pre-open. Taiwan, South Korean and Australian benchmark indices are also seeing losses of over 2% each. And what's happening back home? Darshan Mehta is here to set us up for the day's trade and all that's happened in the futures and options space. Darshan's definitely looking like a weak start today with the XGS Nifty futures trading below that 10,000 mark now.
It is, and there's not only an equity sell-off, there's a commodity sell-off as well. So if you're looking at it, on the equity side, Japan is down, Hong Kong is down, most of the Asian markets futures are down. The SGX Nifty is below the 10,000 mark in trade, so 125-point cut is something that we're seeing. So extremely important. A lot of call writers have been active, and the put writers will get smashed today. What happened as far as the ADRs are concerned? Most of them ended with losses. ICICI, Wipro, Reddy's, Infosys, all of them falling in excess of close to 2%. So weak by most of the ADRs. If you're seeing Tata Motors, Vedanta, HDFC Bank, so all the ADRs ended with a negative bias. Crude, surprisingly, is rather stable in such a volatile market, because if you're looking at it, crude today is trading up almost 1.5%. So we are coming in close to the $70 barrel per mark as far as the Brent is concerned, and WTI is up almost 1.5%. So crude seems to be doing well at this point of time. But that was not the case with the base metals on the LME. There was a big sell-off that happened. All the base metals ended with losses. So copper was down 1.5%, zinc was down 1.5%, nickel was down 2%. You had lead, which was down almost 1.3%. Even COMEX copper is currently trading with a negative bias. And look at the sell-off that's happened as far as China is concerned. Copper is down almost 2%. The zinc is down 1.5%. Aluminum is down 1.5%. And look at steel. Steel is down almost 6%. I was even checking commodities like rubber. Rubber was down almost 7%. So big sell-off that's happening, and money again is moving into the safe haven like gold and silver, which are up almost 0.7%. So that's the commodity queue that we are getting in. As far as the fund flows are concerned, what happened as far as our markets are concerned? Yesterday, FIs, DIs, both of them were net buyers in the market. FIs are bought in 10,000 crores, including the TCS block deal, and DIs are active. They bought in 1,500 crores in the market. Now, what happened yesterday? Despite a very strong start, we ended in the negative. So mid caps were down almost 0.8%, 1.5% drop on the small cap, and the Nifty Bank ended down almost 0.5% in trade. As far as the real estate and media were concerned, these are the two sectors that were affected most. So there was constant selling that was happening in both these sectors. India VIX was up almost 1% in trade. So there was active movement that happened. We were down 40 points on the Nifty. What contributed? A little bit of help from Reliance and ICICI Bank, but sell-off in the banking space and Maruti. So ICICI Bank, SBI, Maruti and L&T were the big sellers in trade on Friday, on Thursday. Sorry.
Darshan was buzzing in the derivative space.
Yeah, so I think everything will change now. With yesterday, if you saw what happened as far as the Nifty was concerned, there was indeed a little bit of long unwinding that was seen, but it was negligible as far as the market was concerned. As far as the Bank Nifty was concerned, the Bank Nifty is under pressure. Serious fresh short positions are taken. 7% open interest build-up, and the counter was down 0.5%. Now, this becomes very interesting now. Just look at these two red lines. So these are where the put writers are active. They wanted to defend 10,000 mark in trade. They wanted to defend the 10,100 mark in trade. And believe me, they will actually be cut to size today. And these green lines will come out because call writers will be extremely aggressive. The crucial level of 10,000 has been broken. So there is a significant amount of open interest build up here. What happened yesterday, it will be interesting to see, because if you look at what happened, look at this. Call writers were aggressive. They were sensing blood. So at 10,100 and 200, they became extremely aggressive. But these people, 10,100, there were some put writers which believe that the market could pretty much have some support. They will get smashed today. So this line will be on the lower end, and this line will be on the lower end today, and the green lines will come up. So it will be an aggressive, ugly day today, and the selling will intensify once 10,000 is broken today. As far as the PCR is concerned, the Bank Nifty PCR went up. The Nifty PCR was rather stable in trade. Some of the stocks that are in and out of the ban, Jet Airways enters the F&O ban. It was down 4%. What comes out of the F&O ban is SAIL. So SAIL is up almost 2% in trade. As far as some of the stocks in focus are concerned, you had Repro Home, which saw significant amount of long unwinding that happened. So Repro Home was down in trade. The other counters was Escort, which saw long unwinding that came into the counter. You had other counters like Mindtree, which saw fresh short positions being built. Open interest built up was 6%. And finally, you had Balrampur Chini, which again saw a big sell-off. So long unwinding was seen on the counter.
All right, Darshan, thank you very much for bringing us all those details. Let's also take a check on the currency market. Saloni Dhanuka joins us now. Saloni, while the rupee did end with marginal gains yesterday, the global trade war concerns could put some pressure on the Indian currency today. But tell us how the currency and bond markets fared yesterday and then what the NDF futures are suggesting.
So, snapping a 5-day losing streak, the rupee yesterday ended 10 paise higher at 65.11 levels against the dollar. Now, the domestic unit was trading in line with Asian currencies after Fed stuck to its outlook of 3 hikes in this year. Now, speaking of the bond market, sovereign bonds gained yesterday for the second consecutive day as traders continue to bet on the short-term debt ahead of the government borrowing for next fiscal year. And hence, yield on the new 10-year benchmark security dropped nearly 2 basis points yesterday to end at 7.56%. Now, in terms of flows into debt market, global funds yesterday reduced their rupee debt holdings for the third consecutive session. They reduced their debt portfolio by nearly 870 crores according to NSDL data. Well, on the global front, the greenback extended losses against major pairs of the currencies after Fed maintained a dovish outlook for this fiscal year. Also, reports of monetary tightening in Europe and Japan and growing trade war fears largely weighed on the dollar index, and the index is now heading for a weekly loss after gaining for 4 consecutive weeks. Elsewhere, Japanese yen was the only G10 currency gainer yesterday as investors rushed to safe haven currency amid trade war concerns. And lastly, speaking of dollar rupee, it is trading at 65.18 levels against the dollar in the non-deliverable forward markets, which indicates a weak opening for Indian rupee in today's trade.
All right, Saloni, thank you very much for all those details. And with that, let's shift focus from the currency markets to commodity markets. Jayesh Khilani joins us now with all those updates. Jayesh, commodities clearly reacting sharply to the trade tensions as well.
Yes, Shraddha. Morning. So let me start off with the base metal space. The index itself on London Metal Exchange, that declined more than 1% for the second time in the last 3 days. Now, this is largely on the back of the trade war concerns that we have been speaking about. However, the US has decided to shield Europe, Australia, Brazil from the steel tariffs. So that is something to watch out for. But as far as base metals are concerned, nickel was down about 2%. That was the top loser in trade. Copper, zinc and lead also declined more than 1% each. And aluminium and tin also closed marginally lower. No signs of green shade over there as far as base metals are concerned. Now, shifting focus to the precious metal space, we saw some bit of uptick come about for gold prices. That was trading about 0.5% higher. Now, what is interesting in gold prices is that the open interest has surged to the highest level since January. So some bit of optimism coming about for the gold market. As far as oil prices are concerned, we did see a 0.8% drop overnight. However, oil prices have recovered smartly in early Asian hours, trading 1% higher. So for WTI, we have more than 65 a barrel, and Brent is just trading below that 70 per barrel mark.
All right, thank you for bringing us those details, Jayesh. Like he said, steel in China is trading about 5 to 6% lower. We could see significant pressure on the metal stocks back home. But let's shift focus to the primary markets again, and it's the first state-run defense manufacturer that's headed to the bourses. Bharat Dynamics will list today after the IPO just about managed to get fully subscribed. Samit Sarkar is standing by with what the valuations could look like on listing, Samit.
So Bharat Dynamics will be listing today. The company had raised close to 960 crore rupees at 428 rupees per share. And if you see the demand for this IPO, it was a bit subdued as the overall subscription was only 1.3 times, with most of the demand coming in from the QIB portion. The HNI portion was undersubscribed at 0.5 times, while the retail portion was subscribed only 1.4 times. Now, if you see, the street is expecting flat listing from this IPO, and if let's see how the valuations will stack up on that. Then at the issue price of 420, the market capitalization of the company was close to 7,800 crore rupees. FY18 PE was 22.7, market cap to sales was 2.1, EV to EBITDA was 13.3. Now, if it lists at a discount of 20 rupees, so the share price would be 408, market capitalization would be close to 7,400. Price to earnings would be 21.7, market cap to sales would be 21.1, and EV to EBITDA would be 12.6. And if it lists at a premium of 20 rupees, then the share price would be 448. Market cap would be more than 8,200 crore rupees. Price to earnings would be 23.8. Market cap to sales would be 2.3, and EV to EBITDA would be 14.1. So if you see, Bharat Dynamics is a Mini Ratna status company managed by the Defense Ministry of Defense. Now the company manufactures mostly missiles, and it manufactures different types of missiles. If you can get the next plate. So it manufactures surface-to-air missile, anti-tank guided missiles, underwater weapons and other types of missile, but it is the sole manufacturer of surface-to-air missile and anti-tank guided missile to the Indian Army. The company has an order book of close to 10,500 crore rupees, which gives a good revenue visibility over the next 2 years. If you get the next. Okay. Also, it has 3 manufacturing facilities currently in Hyderabad, Bhanur and Visakhapatnam, and the company is in process of setting up 2 more manufacturing facilities in the states of Maharashtra and Telangana. The company's main customer is the Indian Army, and it has 2 product categories in its revenue. The one is manufactured goods, second is traded goods. Now, over the period, manufactured goods constitute around more than 70%, but for the first half of financial year 2018, manufactured goods were around 56% of its total revenue. Now, if you see, the company does not have any peers, and if you see the financials of the company, its revenue, net profit and EBITDA grew at a compounded annual growth rate of 39%, 11% and 90% over FY14 to FY17. And on the balance sheet side, if you see, it's a debt-free company with a book value per share of 89 rupees and a cash value per share of 71.5 rupees. However, the return ratios, the return on equity was falling, but the other 2 return ratios were quite a bit stable. The return on equity on an annualized basis for FY18 stood at 21%, return on capital employed was 21%, and return on asset was close to 4%. Lastly, if you see, so that's it with the IPO. Let's see how the listing turns out.
Samit, this is the one where LIC had actually come.
No, this is not the one. It was Hindustan Aeronautics, where reports said that LIC saved the IPO.
All right. Thank you very much for all those details, Samit. Listing at 10 o'clock, and of course, we will also be speaking to the management in some of the later shows. But Chief Economic Advisor Arvind Subramaniam thinks that in the light of the recent scams, the government should see it as an opportunity to make fundamental reforms in the banking system and to see if public sector ownership has aggravated these issues. Listen in.
I do think that this is an opportunity for fundamental reform to fundamentally improve the public sector, the banking system in general. I do think that we need to think about whether public sector ownership per se has kind of aggravated some of the governance issues that we face, both for the banks themselves, for the government and for the regulators. So all of these are important. And therefore, I think public sector ownership should be part of, whether we should change public sector ownership should be part of the reform agenda going forward.
Now let's listen to an exclusive conversation we had with SBI Chairman Rajnish Kumar, speaking to Neeraj and myself. The Chairman of India's largest lender said that the bank is working very hard to improve the way they handle their customers, and there is scope for more improvement.
Gross slippage, the number which we declared in third quarter, our estimate as of now is that in fourth quarter we will not exceed that number.
Okay. Also, sir, I wanted to understand the kind of impact that the hardening of bond yields will have on treasury income in the fourth quarter, because bond yields have only risen from 31st December.
Yes, there will be a mark-to-market requirement, and the yields as of now are 20 basis points higher than what they were at as of the end of 31st December. So to that extent, mark-to-market provisioning will be there for State Bank of India and many other banks.
Has there been any communication to the RBI to allow to shift some bonds to the HTM category to reduce that treasury hit?
There has been a representation by State Bank of India as well as by Indian Banks Association giving certain suggestions and requests, and let us see what the response of RBI will be.
Okay, Mr. Kumar, last 3 or 4 questions. Firstly, just an industry view, and a lot of comments. Firstly, from the Reserve Bank governor recently, that dual regulation of public sector banks is a serious issue plaguing the sector. I wouldn't want you to take sides here, but if you have thoughts on this subject and either or direction that you believe could be more favorable from a functioning perspective of PSU banks.
No, as far as the corporate governance in public sector banks is concerned, definitely there is a scope for lot of improvement, and it is incumbent upon the management of all the public sector banks, including State Bank of India, that they work very hard so that the negative perception about the corporate governance standards at public sector banks is alleviated, and the public sector banks, their contribution has been immense as far as the socio-economic development of the country is concerned. But governance improvement as well as the approach with which we handle the customer accounts or the customer experience with public sector banks, there is a huge scope for improvement, and I can assure your viewers through your channel that we at State Bank of India at least are working very hard for improving the compliance standards, governance standards, the approach and the manner in which we handle our customers, and that is the need of the hour.
Health insurance is all set to get costlier as insurers factor in the cost of covering genetic disorders. Now, this comes after IRDAI's order asking insurers to not reject claims stemming from genetic disorders. Ridhima Saxena, who has been tracking that story, sums up the implications of this order in this report.
First of all, genetic disorders have not been defined per se by the Insurance Regulatory Development Authority of India. However, in a March 20 circular, it said that in line with the Delhi High Court's order, genetic disorders cannot be excluded from any existing or new health insurance policies. In line with that, when we spoke to New India Assurance's Chairman and Managing Director G. Srinivasan, he said that the company may have to go for a price correction in the next year if they have to factor in the cost of genetic treatment in their basic Mediclaim cover. To give you a sense of the size of health insurance industry in India, health insurance is the second largest line of general insurance business and has the highest incurred claim ratio, which means that a company pays 101 rupees for every 100 premium that it receives for health insurance. Also, genetic disorders have been excluded from all the basic Mediclaim covers from so far, but now once they would be included, according to ICICI Lombard's Sanjay Datta, he said that the experience of this year's claim settlement would only help them decide how the pricing of the basic Mediclaim covers would be decided, and then they would take it up with the regulator. Also, HDFC Ergo, like you said, mentioned that there is no definition of genetic disorders which can also include something like ischemic heart diseases or neural tube defects, which have so far been covered by health insurance schemes separately through different plans. However, we are yet to see what will be the implication of the cost, which, as indicated by different insurance companies, would only go up if genetic disorders were to be included.
All right, let's also take a look at some of the other stocks that will be in focus today. First, we have L&T Technology Services. Now, that company has won a multi-million-dollar contract from a German plastic maker. You also have JSW Energy, which has secured a power purchase agreement for the supply of 200 megawatts with Punjab State Power Corporation Limited. And with this, the company's long-term PPA proportion has risen from 69% at the end of December to 73.8% now. United Spirits, also keep an eye out on that one. They will consider a stock split on April 13th. Shalimar Paints will raise about 50 crores from its issue, the price for which has been fixed at 140. You have Anjani Portland Cement, a smaller company there, but they will set up an additional clinker producing unit for 400 crores. And this is when the company's market capitalization is trading close to 400 crores right now. Alankit Limited has said that its subsidiary has received full-fledged money charger license from the RBI. And on the back of bulk deals, we're tracking Ashapura Inmates, where promoter Harshat Thakkar bought another 3 lakh shares, a 1.2% stake. He has continuously been upping his stake in the company. And then you also have Shaily Engineering Plastics, where HDFC Mutual Fund has bought 50,000 shares, a 0.6% stake yesterday. But do remember that some of the negative global sentiments could weigh even on some of the positive news. And don't forget that we might also see a sharp negative reaction on some of the steel companies on account of the 6% slump in the steel prices in China. But elections will be held today for 58 seats in the upper house of India's parliament today. Here's a little explainer on why Rajya Sabha elections are so important. Take a look.
India's upper house of parliament, or Rajya Sabha, has 245 members, of which 233 are elected indirectly and 12 are nominated by the President of India. The election and tenure of Rajya Sabha members of parliament are quite different from that of the Lok Sabha. A Lok Sabha or People's Council member is elected directly by Indian citizens from a particular constituency. A Rajya Sabha or Council of States member represents a state and is elected by the elected members of the Legislative Assembly of that state. Lok Sabha members enjoy a 5-year term, after which the House is dissolved, which means that all members go up for election at the same time. The Rajya Sabha is a permanent house that is not dissolved at any point. Members serve a 6-year term. A third of the house is elected by rotation every 2 years. The number of members a state sends to the Rajya Sabha is on the basis of the population of each state. Uttar Pradesh has 30 Rajya Sabha members, Maharashtra 19, Bihar 16, and so on. Now, given the rolling nature of Rajya Sabha elections, a party that has had a sustained run of victories across India's states still has to wait for a considerable period of time to significantly improve its strength in the Rajya Sabha. While the Bharatiya Janata Party may have returned to power with its highest ever in states like Uttar Pradesh or Maharashtra and has won a number of smaller states for the first time, it gets to exercise their strength only over a 6-year cycle. Why is the March-April 2018 Rajya Sabha election important? For much of the Modi government's tenure so far, the BJP's strength has been lower than that of the Congress in the Rajya Sabha. It is only recently that the BJP has become the largest party in the upper house, and the 2018 round of elections presents an opportunity to increase that lead. The BJP currently holds 18 seats that will go up for election, and Bloomberg Quint columnist Richard Rosov estimates that the BJP will enjoy a net gain of 9 seats in this round, taking its tally to 67, or 27% of the Rajya Sabha strength, still way below the halfway mark.
Well, with that, it's a wrap on this edition of Daybreak. All you need to know is up next. Stay tuned to Bloomberg Quint.
Are we live?